Welcome to our market segment, coming to you live from the Johannesburg Stock Exchange. Well, food producer RCL reported a 9.9% increase in profit, helped by the chicken business that recovered, as well as strong performance from its logistics side. The company did mention that they did try to alleviate price pressures on consumers. I spoke to the CEO, Paul Cruickshank, about the year that was for RCL. Take a listen.
It has been a very challenging 12 months, not only from an environment where the consumer is under pressure, but also just from things from floods to riots to peripheral issues that have had a major impact on our operations. But we feel that we've comfortably got through that result for the period, and as we said, overall pleased with our results.
On that note, then, what was the noticeable key drivers for you when you look at the different divisions?
So the two business units that improved the most was Rainbow and Vector. We in our minds, that came off a low base, so was expected to see that improvement. The other business units was more challenging in the environment, with the raw material commodity prices pressure being pushed through, the cost pressure being pushed through into those businesses. And I think overall did well under the circumstances. And then lastly, sugar, which we expected to be lower than the prior year. Last year we set a record result. This year is the second highest result in our sugar business. So we expected it to be done. And having said that, it probably exceeded our expectations in the end of the day.
Let's talk about Rainbow's turnaround strategy. How far are you with that, and what's still left to tick off?
So it's a process, and it'll take a couple of years. Our biggest issue has been our breed performance, and sadly, when you've got a breed issue, it takes a few years to filter through the entire supply chain. Where we expect from the beginning of F24, so this time next year, the new breed will be fully implemented into the system. So we've still got another 12 months to deal with our breed challenges. The other part that the Rainbow team are focused on is from a cost of production perspective and driving down our costs, and have made fairly good progress in that regard, but still some work to be done in that space.
One of the things you mentioned in your actual results presentation is that decision by the Department of Trade, Industry and Competition, and that's to suspend the implementation of the definitive anti-dumping duties. I mean, in what way could it have been better done? Because you do describe it as disappointing. So how could we have worked around this?
I think the surprise factor is what made it disappointing. There was no consultation between industry and government on it. We have invested on the back of the master plan. Part of the commitment from industry was to invest locally in local production. We've done that. We call that out in our announcement. Doubling our shift in KZN, investing 220 million. We've also, on the back of that, there's 360 million rands with an investment by contract growers, the majority which are black contract growers. So we feel that we've made significant steps from our perspective in delivering what we felt was necessary in the master plan. And I suppose it's the surprise factor which we've called out as disappointing. I think what's critical is that it is for a period of time, per the minister, somewhere within a 12-month period is what he referenced. The tariffs remain in place. I think it's important for people to understand we're specifically talking about anti-dumping duties here. And hopefully within that time period, this will be back in place and will stabilize supply and demand within chicken again.
I want to go back to the Vector business because, again, in that presentation, you talk about a portfolio optimization process where you decided to initiate this exercise, looking at the select group of investors. Now that you seem to have gotten some kind of credible interest from prospective acquirers, would then the idea be that you would offload that side of the business? What is the thinking here?
So what we announced this time last year is what we've called managed separation, and we called out Rainbow, Vector, and Sugar. What we have said in this announcement is we have deprioritized the sugar part of that separation, and our focus is on Vector and Rainbow. Rainbow needed operational setup to be able to stand alone. That's what we focused on. We're now in a better position and ready to separate that at the right time. And Vector is more advanced, as we call out. We did do what we call a market sounding process or exercise to tease out interest, and we did get substantial interest. And what we will do is update the market as and when the time is right.
When it comes to the Triple BE scheme that has been described in your results as not having delivered the value for those who participated at the time, what's your sense of how the market views the RCL share price?
Yeah, so it's a difficult one. Our share, we have very limited free float. We have a major shareholder who owns 80% of our business, and the balance is limited free float. So the share price is quite difficult to get a fair reading on the share price. As a consequence of that, our volume trades in shares is very limited. So unfortunately, that scheme has failed. What we have committed and communicated to employees is that we will look for a new scheme and hoping to get some sort of commitment by the end of the year for a rollout in calendar 2023.
With rising, commodity input costs, whether you're looking at wheat, whether we're looking at fuel costs, what does that mean for the business? Does it mean that at some point you anticipate them to sort of level out, or is this a thing where we got to ride it out to see what actually happens, especially when you look at Ukraine, Russia tensions, etc.? What's in your control here?
So sadly, we've pushed a number of price increases through into the market, which is having an impact on the consumer, and inflation, which everybody has seen inflation numbers, and food a big driver of that inflation. What we have seen in the last few months is a leveling out, I would call it, of the commodity price movements, some moving down slightly, which is positive. But unfortunately, the rand in the last month has moved in the opposite direction. So it's all of those dynamics coming together to play out in what the outlook may look like. We are hoping for at least a stabilization from an inflation perspective. And the key one now becomes the rand and what will happen there. The war in Ukraine and commodity shortages, drought in Europe will have a role to play. So we see I'm going to say a challenging 6 to 12 months from a commodity pricing pressure, and then hopefully some relief thereafter when natural supply and demand takes its natural.
Well, that was Paul Cruickshank, who is the CEO of RCL Foods.